2025 will bring plenty of changes for Americans, some of which can impact our financial future. But how do we make sense of all of those changes coming? Well, local financial professional Tom Neumann from Drake & Associates joins us to talk about the new money rules you need to be aware of and how to make the most of them. Tom, good morning to you.
Good morning to you. How are you today?
Happy New Year, sir. I haven't seen you since the last year. Good to see you.
It's been a little bit. Yeah, good to see you.
Well, listen, what changes should taxpayers be aware of this year?
The biggest one is that the standard deduction actually changed. So for single filers, that increase that happened was about $400. For married couples filing jointly, that increase was $800. So that's important because that deducts the amount of taxable income that you have. But one thing to consider is that every single year that we're dealing with inflation, the IRS actually adjusts the income tax brackets a little bit, and this year was no exception. So because of those changes, you just want to take a look, and if you're on the cusp of one of those tax brackets where you might be headed into a higher one, you might want to talk with your employer about adjusting your withholding every single paycheck so that you're not in a position where you have a big tax bill or a huge refund. So that's really important. And then finally, retirement contributions, HSAs or health savings account contributions have increased for the year, as well as retirement plans like 401k, 403b, and TSPs, things like that.
Well, what other rules should we be aware of for 2025?
Yeah, so in 2025, the catch-up contribution for individuals aged 50 and older does remain at $7,500. However, employees between the ages of 60 and 63 can now actually contribute up to $11,250 instead of the normal $7,500. Also, there's been some adjustments to part-time workers. Part-time workers had some restrictions put on them as far as when they could access their 401k plans. Some of those have been adjusted and more access is available to them. The other thing that you want to consider is there is a new rule for anyone who inherits an IRA. The IRS is now placing an inherited IRA under a 10-year rule, which does require the account to be emptied by the end of that 10th year. Otherwise, you could be subject to a 25% penalty.
And why is it so important to pay attention to these new financial rules?
It's really important because, you know, money and taxes specifically really dictates a lot of what we do, right? So Social Security benefits, for instance, do have the cost of living adjustment. Oftentimes it's referred to as the COLA adjustment. It is going to be increasing by around 2.5%, which is less than what we had prior. But for most people who are receiving their Social Security benefit, that too, they are usually on Medicare, and Medicare Part B, the premium for that is increasing. So, you know, anybody who's on a fixed budget like that can have some either increases or decreases to their income on a monthly basis, which, you know, could put them in an adverse situation if they're not planning accordingly.
All righty, Tom, we appreciate you as always. Friend to the show, thank you so much. Great information to know.
My pleasure. You have a great day.